Hey guys, it's Pamela Ferguson, and today we're talking finance. So it seems like this never-ending cycle of well, I'm never gonna pay off my home. I just adore finance. It's a personal love of mine, as well as I do have a master's degree in business administration. So it is a personal love for me that I like to talk about, and I like to see if I can help people I know and out there in the world about it. So I want to talk about today is that what I have found in my generation, which I'm Gen X, as compared to maybe the baby boomers and previous generations, is that we move a lot more often than the other generations have. They've usually got their house, they stay in it for many, many years, they pay it off, it's wonderful. However, I have noticed in my own personal experience as well, is that people are much more transient than they used to be. So people are staying in a job for 5 years and they're maybe moving out of state, or you're just moving for whatever reason. And so you're not able to build up and pay off, because once you get a new home, typically you're starting at another 30-year mortgage. So it seems like this never-ending cycle of well, I'm never gonna pay off my home. Number one, you should ask yourself, I don't know, do I have to? Is it that huge a deal if I pay off my home? Number two, you can say, is it even the best for me financially to do so? What are the pros? What are the cons? I don't know. Should I do it? These are things that you need to ask yourself. In general, I would say, well, having debt is not good. There are two different kinds of debt, and that's installment debt and revolving debt. So installment debt is when I mentioned your mortgage is something that is for a specific amount of time, 30 years, monthly payments at, $800 a month, whatever it is. Versus a revolving debt is something that has no end date. So it'd be like a credit card, things like that are on a revolving. And another example of installment would be a car vehicle. So you have a loan for 5 years, at 6% interest, blah, blah, blah. These are all installment debts. So first of all, your goal should be to have no revolving debt. None. No credit card debt, none of those things. And you can watch some of the other videos I talk about on that, but that would be your first goal. So before you even think, should I pay off my mortgage? If you have revolving debt, I can tell you right now the answer is no, you should not pay off your mortgage, because I'm guaranteeing you, especially in the current market, that your interest rate on your mortgage is not higher than your credit cards. It's just not at us here in the, this time of the, our economy and where we are. But so no, if you have revolving debt, the answer is no, you should not pay off your mortgage or even your car, any of those things. You should not pay off your installment debt unless you have paid off your revolving debt. So that's number one. Okay, but let's say it is. Let's say you have paid off all of your revolving debt. That means you pay every single month on your credit cards. You don't owe anything beyond, you pay it off every single month, right? You have no extra outside that you don't pay. Well, then you have to evaluate, okay, well, should I pay off my car? All right, well, what's the interest rate on your car? And interest rates right now, especially on vehicles, are very low. My car is currently paid off because I have a 7-year-old car. So my car doesn't have payments anymore. But when I did, my interest rate was 0.9%. It wasn't even 1%. So I said to myself, well, I'm not going to pay 1 penny more on this car. Well, why? Why wouldn't you want to pay it off? Because that money that I'm not paying, I can take that and put it into some other avenue, some other, any type of format to get more interest than I would be saving by paying off that car loan. So I did not. I literally had it for the entire 5 years and did not pay 1 penny more than I had to. Now, an exception would be if you had, for some reason, maybe previously gone through bankruptcy or foreclosure or repossession, and so your interest rate was extremely high. That could change my answer. But you really have to look and say, well, okay, well, how much is my interest rate? Okay, can I put it someplace else and make more money? Or is it better for me to pay it down? So let's say your car payment is $417. If you've determined, yes, I need to pay this car down. That's better. The interest rate's higher. And let's say it's $417 a month. Ideally, you could start out and say baby step and say, okay, I'm going to pay $450 a month or even $420. I'm going to round up to the next tens and I'm going to pay $420 a month. Or I'm going to round up and pay $450. Or I'm going to round up and pay $500 a month. Or if you're really good, you can say, I'm going to just take all the extra money I have and put it toward there. Again, only if the interest rate is very, very high. I would not tell you to do that if a 0.9% interest. And the cars that we've gotten since then, well, I have teens, so since I bought my car, we've bought 3 cars. Not all new, but interest rates were, I think, it's like 4. So it's still really good. So I can make more than 4% interest if I put it in other types of vehicles for growth. So I'm not going to be paying extra on that car, even though I carry no revolving debt. Instead, I want to take the extra money and put it into some sort of account that's going to earn money and continue to pay monthly on my car payment. Now the same goes for your mortgage. If you're like, I'm so good, I'm not a spender, I literally have no debt but my mortgage. Same question. Okay, what is your interest rates? Interest rates now are around 4.5% for housing, which is really amazing. I mean, these are some great numbers for housing. I think anything below 6 is very, very good. So if you have one of those amounts, you can say, you know what? I don't want to, wait 30 years to carry this debt. And the amount of interest I'm going to pay in this 30 years is astronomical, right? It is. If you look at the amortization is what the mortgage company gives you, and it says, okay, you're borrowing $120,000, but you're actually going to pay $375,000 or whatever it is. You're like, it's like sticker shock. You're like, what? How is that possible? How could I'm paying that over 30 years? You can do a couple things. You can say, okay, I want to pay down, and I would go for the rounding up amount. So let's say your mortgage is $1,113. Go up to $1,200. Go up to $1,500. I don't know how much available you have. That's an option. Or, even better, refinance for a 15-year mortgage. Refinance at a 15-year mortgage. There are lots of companies now where there's no cost to refinance. You have to just really search them out and find for your area. And that way it really condenses a lot. If you have no other debt and you are trying to focus on paying down your mortgage, that's an excellent way to do it. Or if you think, well, my interest rate isn't so bad and I want to go ahead and invest it in other ways, there's nothing wrong with that either. Now, if you're getting up there in age and you're like, well, I know if we pass away, my children are going to inherit this debt, that is something to consider. And you could say, well, listen, you've got this money here to cover it when we pass away. Or you're like, okay, I'm going to focus on, I'm really going to focus on paying down the mortgage. Or I'm one of those people who I always like to do a combo of things. So, you could say, well, I'm going to take 75% of my extra money and put it toward either one. You could say I could put it toward my mortgage extra. So let's say you had, $100 extra. So $75 extra I'm going to pay on my mortgage payment, and $25 I'm going to invest away. Or you can even flip-flop it. $75 I'm going to put away to get a higher interest earning, and then I'm going to still work on chipping away at that. I can't afford a 15-year payment, but I still want to do more. Sometimes that's the case too. Sometimes the difference in payment from a 30 to a 15-year is a big jump, and you're like, yeah, that's too much. I want to pay extra, but I don't have that much extra to pay. So those are a couple options you have, and reach out to me to ask me, and hopefully I've had some sort of experience with this on what you should do if you have zero revolving debt. Should you pay down your installment loans? Good question.